Hey guys, another market forecast. This is probably going to be the final for today. So I want to give you guys a video forecast. I actually want to show you what market corrections do look like, especially as they develop. And of course, we have a nice, beautiful chart on USD Swiss franc. Well, first of all, what we need to do, guys, especially when it comes to forecasting any market or any trend, is to look at the higher time frame, right? So as you can see on USD Swiss franc, it's quite obvious to see that the market is in a corrective phase, a longer term corrective phase. As you know, safe havens look to prosper in this sequence, right? So we see the final, I guess you could say, final developments of this wave here, this cycle wave or the super cycle wave that did develop here, and it's clear to see, of course, how it's come about. So we have multiple ABC patterns. And of course, the market has subdivided itself, right? So we've completed the entire super cycle wave, and we're now in the next super cycle correction, right? So this is a longer term correction which has manifested itself nearly over 10 years, and eventually, at some point in the future, we're expecting a bounce higher, and a significant bounce higher, and a significant change in cycle, right? So this is USD Swiss franc. Now, if we break it down, guys, as we always want to do, we want to go to the higher time frames, we want to break it down to the lower time frames, and we want to subdivide what we see in this market. We want to subdivide it, right? So now we go down to the weekly time frame. We then look at the smaller wave fractals, right? So whenever we're doing wave analysis, we're doing any kind of cycle analysis or just basic technical analysis, we want to break down what we see, and that's quite simply what we're doing. The only tool we don't have, guys, in our arsenal right now is volume, and the only reason being is because the exchange we're on. Now, of course, guys, not everyone's going to use TradingView. People might use NinjaTrader, people might use Genesis, people might use MotiveWave, and all these other charting packages. But for simplicity and ease of access, TradingView provides the best services for us, right? I mean, I don't pay for TradingView packages anymore because I feel like it's not worth it. And the other benefits, of course, futures data, which may be important, can be obtained elsewhere. So now from USD Swiss franc, of course, when we look at the trend in more detail, you can see that it's fairly corrective. Uh, what you want to do, guys, especially when you're marking corrective waves or impulse waves, especially if you're looking at from wave principle perspective, you want to take your time and just really, really look into the chart, right? Not in too much detail, but first of all, you want to spot the patterns you can already see, right? Because if you can spot the patterns that you can already see and that are really, pretty visible and pretty easy to see on the eye, in fact, the whole entire chart is probably going to be easier to identify anyway, right? So you detect the first three patterns. You see wave W, then you see the A, B, C, wave X, and then you have wave Y. Now, you can also determine this as wave W, wave A, B, and then, or wave W, X, Y. Of course, you could do it any which way, right? It doesn't really matter. Of course, I have two different perspectives on USD Swiss franc. I have one with that kind of, I guess, objective, and I have this one with this kind of objective, right? So it's easy to see what's actually manifesting itself here. So we can see that the market is subdividing. It's in a corrective phase, right? We don't really need to focus on what's happening here. We know what's happening here, but our focus should now be on what's happening here on the weekly time frame, right? So you can see that the market formed a WXY pattern. You can see the channeling here. You can see how beautiful the channel is here and how visible the channel is here also, right? So we plot our Elliott channel. Of course, we have an Elliott channel here too. So we plot our Elliott channels, and of course, the market now becomes a lot more easier to see. All the channeling techniques. We always plot our channels to identify where the end of the wave could end. And sometimes the market won't end at this wave, but there's always a high probability for the market to end, or at least near the end, of course, the end of the channel, right? So now let's look at the market. We know by form of alternation, the first wave is complex, the second wave is most likely to be simplified. If the first wave is simplified, the second wave is most likely to be complex. Sometimes, though, the first wave will be complex and the second wave will be even more complex. But it's all about being attentive and understanding that, regardless, a double zigzag pattern is comprised of two ABC patterns. A triple zigzag is comprised of three ABC patterns, and so on and so on. And that's what we kind of need to understand here, right? So now looking at the market, of course, you can see we've completed the first W, and then we have wave X. And now, as you can see, we're completing wave Y, right? So we have the ABC pattern here, and then we have the ABC pattern here also, right? So it's clear to see what's happening in the market here. So this isn't actually a WXY, right? So I've actually marked this wrong. This is actually an ABC pattern, right? It's actually a clear ABC pattern as well, right? So let's just change this very quickly on the weekly perspective, right, and make sure this is most clearly reflected, because then, as you can see, the next wave here is more complex, right? So if the first wave is simple, the next wave is most likely going to become complex. But as you can see, guys, if we look very closely, the first sequence of this double zigzag has completed a more complex double zigzag as wave W. We had a sharp wave X, and by normal procedure, guys, if the first wave is complex, again, we should expect the next wave to maybe be more simplified, right? So now, if we go into the daily time frame, you can see how simplified the wave gets, because now it produces an impulse wave, right? A very, very clear impulse wave, right? So now, looking on lower time frames, if we kind of zoom out of our charts a little bit and look at the trend within itself, you can see how the market here is producing a very, very clear impulse wave, which is subdivided, of course, into a third wave extension, right? And this third wave extension features a fifth wave extension. Of course, an extension will feature an additional impulse wave, which it does, right? Now, of course, we have this fourth wave triangle. Now, with the pattern of alternation, as you can see, if we scroll back up, the first pattern here was a zigzag. Of course, you then have this, it subdivides. And then the next pattern here we have is a triangle, right? So it's clear to see that a triangle has formed here. And then, of course, you can now make a case that the market is now subdividing itself into, the final stages of the impulse. Now, what we do, guys, pretty simple. Again, we lower our time frames, and we can see the impulse in manifestation, right? So it's now clear to see that, we've had the zigzag as wave 2, and we're now forming a sideways kind of correction here. Very clear to see. If we go into higher time frames, of course, you can see how the market is subdividing here, and our projected target is the end of this channel. Now, a projected target also for an impulse wave is the 382 or the 618. Well, the 382 is actually a 618 relationship, just inverse. So it's the inverse relationship of the 618. So both relationships, of course, we can pay attention to. But by normal procedure, we're going to look at the 618. So our target for this impulse is, in fact, the 618, which is where we will be targeting, of course, if we take a trade here. So before we can even take a trade, guys, we have to be attentive to what could form here. Here's now our projected target for the impulse. We're now looking for the sideways correction, which is most likely going to be a flat to form before we witness a sharp correction to the downside, right? So we're expecting not sharp correction, a sharp impulse to the downside, all the way to the 618 here, right? But by normal procedure, we're looking towards the end of the channel. The 618 is just our projected target. So this is kind of how you want to break down your markets. Now, if you look at the majority of Forex markets, guess what? They're all in some sort of corrective phase. You just need to be able to count your fives, you just need to be able to count your threes, and that's all. Once you do this, guys, then you'll begin to find opportunities just like that. And if you start to incorporate everything we've talked about, especially the guys that we're doing sessions with, if you start to incorporate everything we've talked about, this should help you along your way when it comes to doing your analysis, right? So when I do my analysis, first things I'm doing is I'm analyzing the chart. I'm using my analytical eye to see, okay, is there any recognizable patterns I can spot off the get-go that may give me an indication to where the market sequence is? Number one. Number two, okay, can I draw? Can I identify any structure? Right? Is there any identifiable swings? Is there any identifiable five-way swings? Any identifiable three-way swings? Okay, great. Next, then I start my wave count. Right. So the previous wave, what was the previous wave telling us about the trend? And what could it tell us about what's going to happen now? And then you start marking your chart, right? You come up with one perspective, then you come up with another perspective, and you have a bias, but you don't marry it. So whatever bias you think is more likely or more probable, well, again, probability against possibility, right? So of course, there's the possibility and the probability here is, of course, we're seeing a five-way sequence, right? Strong trend, we're expecting another sell-off, and that's how it goes, right? So that's how you do your wave analysis. I hope this video was clear for you guys. Of course, I'm trying to put out as much analytical videos for you guys over the weekend to help get you guys prepared, right? Because the next sequence after when USD Swiss franc bottoms on the weekly time frame, right, is going to produce a sharp wave, right, and a very, very sharp wave to the upside, right? So what could this mean from a fundamental point of view? Well, right now the market is kind of risk off or is risk on, right? But there'll be a point in time when the market is completely risk off, right? So we need to be prepared for that. Either way, guys, I hope this video was beneficial. I will be sending out more. Hope you guys enjoy your weekend, and I'll see you on the next video.